Right now, everyone is making money in the stock market and things keep going up, or at least that's how it all feels. All-time high after all-time high gets set every single week.
Our next guest says that he sees more room for the markets to rally from here.
I think that the earnings story is compelling. We think that the policy story is going to offer tailwinds.
Certainly seems to suggest there could be some more room for valuations to grow.
And anything related to AI in the slightest is going to the moon.
This AI boom is really something foundational.
NVIDIA shares, as we mentioned, are soaring today on the back of that strong fourth quarter earnings beat.
Even the crypto market is back with a bang, with Bitcoin, Ethereum, and lots of others now making some strong moves. I mean, even Tesla's going up again, so something must be going on. Now, the big question is, and this keeps coming up in my comment section for my videos, should you hold off from investing and wait? Because it feels like we're in some kind of bubble. And I'll be honest, it's really hard not to go along with people and say now is the time to hold off and just stop investing. It does feel like things have gotten a little too ahead of themselves, and just like a lot of you, I get some of the same vibes that we had during the crazy bull market of 2021. Anyway, without jumping to any conclusions right away, why don't we just step back a minute and have a quick look at the market generally, look back a bit at the past to see if we can learn any lessons, and finally decide now if really it's time to stop investing. Okay, first things first, if you are a long-term investor or you've been an investor for a long time, you better get used to all-time highs in the stock market. Sometimes they'll happen one after the other, week after week, and sometimes they might take a few years, but they will almost certainly happen at some point. If we actually look back at the history of the stock market, I found this bit of data really interesting. Here's how many new all-time highs happened in the S&P 500 each decade. As you can see, things are all over the place depending on the time. For example, in the 2000s, which included the aftermath of the dot-com bubble, there were only 13 all-time highs during that period, so an average of just over one per year. Yet in the decade leading up to the bubble, there were 310. That's more than 30 per year, meaning that in any given month, the average was between 2 and 3 new all-time highs. Now, even taking out those extreme examples, what about just taking an average and seeing what this means? Well, if I work this out quickly for you, I make the average all-time highs per decade between the 1950s and 2020s so far 156. So that means in any given decade, 156 new all-time highs. So in any given year, that's around 15 new all-time highs, and then in any given month, that's just over one new all-time high. So when you put it like that, be honest, a new all-time high doesn't seem so scary. But the problem is that our brains play all these kinds of tricks on us when they happen very quickly in a row. You see, just on that point, as humans, we are generally rubbish at investing, and I mean that in the nicest possible way. We're crap. We suck at trying to think long term, and our brains are programmed at best to get us through a single day. To prove that point, if I don't get a good night's sleep or have breakfast, I can tell you that I'm not spending a second thinking about the stock market and where it's going to be in 20 years' time or my retirement. All I'm going to care about is locking down those Quaker porridge oats and getting them nuked in the microwave. Nothing beats it. Add a banana and some honey and oh boy. Until I'm full, I am not spending a second thinking about the stock market. So this week, you might have seen the news coverage speaking about the amount of cash that Warren Buffett has inside of his company, Berkshire Hathaway. Their results from Q4 shows that they have a war chest of $168 billion, which is more than they've had ever before, and it's $60 billion more than just 15 months ago. To try and even put this into some kind of perspective, this is really, really hard. $168 billion is more cash than the entire revenue of Nike, Starbucks, Intel, and Tesco combined. I thought I'd slide a nice little UK reference in there for us to keep things local. Every little helps. Now, investors are looking at this and thinking, well, if the Oracle of Omaha isn't buying stocks and keeping a massive pile of cash, I better do the same thing and be careful about what I invest in. After all, he knows what he's doing, and he's well known for only buying things when they offer a good value. Makes perfect sense, right? You just copy what he does and you'll be fine. Well, I disagree here, but rather than me just saying this, why don't you hear it from the big man himself as he sits along the late and great Charlie Munger?
We haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, in all the time we've worked together, and I'll tell you something later on maybe about how learning takes place, but we have never, I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do. No.
So look, please don't try and copy Warren Buffett, and trying to read into a cash pile as some predictions for the future stock market performance is just wishful thinking. Do it if you want, it's your money after all, I'm not your financial advisor, but pay attention to what he says and burn that video in your brain for later. Trying to compare yourself to Warren Buffett is not helpful in my view, as you aren't playing the same game. Most of you out there have a full-time job, a family and responsibilities, and investing is just one part of your life. You might invest every month as you get paid or in some other period, but you aren't sat there watching the markets all day. Unless you're suddenly managing money for other people and have a track record over the last 50 years of amazing performance, please don't compare yourself to Warren Buffett. I think it's a waste of your time, and certainly don't try and hold $160 billion of cash. You might be there for quite a while trying to save that much while you could have been investing instead. Now, I couldn't make a video like this if we didn't talk about this insane rally we're having in the tech sector, and especially anything related to artificial intelligence. Nvidia has quite literally gone to the moon in a short period of time, and it's carried every other stock alongside it. Over the past year, it's up more than 230%, and it's for good reason too. It's multiplied its earnings and revenue many times over, so it's not like it's just speculation. And as well as Nvidia, you've got stocks like Supermicro, AMD, ARM, and many others riding that wave. Just on Supermicro, that's had a 740% move up over the past year, and I swore that company just made hardware and had low margins, but clearly they must be doing something right. Now, as investors, we're all looking at these gains thinking, why didn't we YOLO our life savings into these stocks last year and worked out how much we'd have in our accounts? But the reality is that this is just hindsight investing. I'm sure, like me, you've all got your stock market battle scars from when you held Nvidia, AMD or Supermicro, but you sold a long time ago, even if it was for a good profit. The truth is, investing is extremely hard to do if you want to make those huge gains, because you have no idea if you're at the top right now or nowhere near it. I think this is even harder to do with individual stocks rather than just talking about the market as a whole. Individual companies can quite literally do anything at all in a very short period of time, and this includes going to the moon as well as going bust. Whereas the wider stock market, something an index fund investor might look at, is going to be a lot less volatile. The thing is though, here's the big question: is the stock market overvalued right now, and is it time to stop investing? If I had the answer, like any of you, I'd be very rich, but here is something I can say. The price of a stock is based on the future value of all cash flows, at least that's what the theory says. And all that means is that when you buy a company's share, you're paying not just for the company today, but everything it can do in the future as well. Now, at any given point, a company's share price can look cheap or expensive looking back at the past. But unless you know the future, there's no way to know if it's good value. That's what the market is just trying to guess at any point. For example, there's no point looking at the past financial data of a company that is just about to release a new wonder drug that's due to cure some disease. Nor is it worth looking at Nvidia's past performance to try and work out its value next year. Everything is tied up in the future that is not knowable. If the company keeps growing or even grows faster than expected, the price will adjust to reflect that, and people will speculate and guess along the way to find that price. At any given time, it's just a fight between the buyers and sellers to agree on that price that suits them. Put it this way as well, there's nothing you're going to find in the financial statements of a major public company that hasn't already been crawled through by thousands of other computer-generated algorithms and other investors. All of that is just old news. What we're interested in is the future, and that is something we just don't know yet. I did a video on this recently that goes into more detail, maybe worth giving that one a watch afterwards. But the short point I wanted to make here was that you can't know if you're in a bubble or some kind of crazy market until it ends. I'd love to fast forward 20 years to see what the market does, but until time travel is invented, we'll just have to speculate and guess. I will leave this point with a quote though, and it's the old classic that says the stock market can remain irrational longer than you can remain solvent. That means that it could keep going up, or it could go lower and even worse than maybe you expected. And the more you try and guess what it does with your money on the sidelines, the harder it gets. But anyway, you are very welcome to try, and do let me know in the comment section below how you get on. Now, one final point I want to go through before I leave you with my opinion. Let's play a bit of a game. Let's say that you think the stock market is in a bubble right now and it's peaked. You therefore make the decision to either stop investing with new money or you sell everything and wait on the sidelines. Now, fair enough, that's your money and your decision. The next question will then be, well, okay, when do you invest back in? Are you waiting for a 10% pullback, a 20% sell-off, or maybe even something worse? What will you do if there's only a 5% correction or the market keeps going higher? Say you then do time it right, just for the sake of argument, there's a 10% correction and you've bought back in and you are now an investing god. When will you be selling again? Another all-time high? Well, don't forget that they happen a lot more often than you realize, and you might see one in another month. So do you try and time the market again and again and again? You see, the issue with trying to guess at all is that you have to be right many times in a row over many years, getting the tops and the bottoms accurate. If you can find me someone who does this on a regular basis, I'd love to know, but we'll always find someone in the comments section, won't we? And you can be rest assured that there are plenty of channels on YouTube that will tell you exactly when to buy and sell, or at least pretend they know. They'll show you the year-to-date returns because that's all that matters, right? Anyway, I hope you see the point. So an overvalued stock market that's in an AI frenzy? Maybe, maybe not. I mean, some stocks are definitely looking pricey from what they used to sell at, but things are also changing very quickly too. Valuations are being backed up by a lot of great performances with real profits and cash flows. And I think this is very different from 2021 and something like the dot-com bubble. But hey, I don't have to spend a single waking second thinking about this because I invest every month without thinking into a globally diversified set of index funds. I'm such a boring investor, I know. Sue me. Now, there's loads more to this topic, and believe me, I feel FOMO like you lot and get concerned when stocks run up so much so quickly as well. I promise you I am not immune to this. But to help stop me making any rash decisions, I like to pause for a second and take in the data. So this is why this next video will help you work out what you might want to do right now. I'll see you over there, and until next time, happy investing.